What's up, guys? Pitmeister78 here. Finally back online. Whew, what a rough weekend. Yesterday I was getting ready to make a video, and this computer that you're looking at right now, the hard drive crashed on me right in the middle of I was just surfing the net, getting ready to make a video, and boom, hard drive crashed. Then the other crappy part was as soon as I went to go onto my desktop to check out the troubleshooting, my network had crashed too, and it didn't come on until the next day. So not a good day for me. But anyway, if you remember where we left off, well, something I actually wanted to talk about first was a couple of things. I've noticed, that even though my strategy is working, my gains are not outpacing my losses, and that's not a good thing. So something I need to do is I need to really decrease the risk I'm taking, which will allow me to do bigger lot sizes. So for example, like I said, if my maximum risk is 3% of $1,000, that's $30. So if I wanted to trade one lot, I could only risk 30 pips. If I wanted to trade half a mini lot, then that's 60 pips. So I really want to try to keep it anywhere from 0.4 and 0.5 mini lots, just to be able to make some of that money back. Because when I'm trading like 0.28 lots and I get 60 pips, it's only like 10 or 12 bucks. But when I have a loser, it's always minus 30. So I have to win like 3 times just to break even. So that's something I'm going to start doing. I'm going to start either using the ATR right here, or the bar low, whichever is lower. So whichever is the least, rather. So let's just say, if the bar low, if this is 95 and the bar low is 70, then I'm going to use 70. Whichever one is the less. So that's one thing. Another thing too is the stochastics. You see my chart here. I have a stochastics line running. I'm usually not a big fan of indicators. Well, I should say I'm not a big fan of a lot of indicators. What I like to do is, I like to look for confluence. A good trader told me once that, all 3 indicators all pointing to yes is better than one thing pointing to yes. It's never a guarantee, but the more things that line up with each other, the better the odds. Now, I've seen some people with some charts that have just crazy amount of indicators. My chart here, starting to get a little messy. Again, there's just some moving average. There's just 2 moving averages on here, and my bars and my bands. That's it. And now the only indicator I have is the stochastic, unless you count ATR, but I don't really use that for anything other than risk and to see where I'm at. I don't trade off it. Now with the stochastics, again, I don't trade off of it. I use it as maybe like a confirmation signal. So I just wanted to show a couple examples here so you can see what I mean. It'll help prevent false signals. So if we see here, obviously, okay, so let's do this right here. So we see that we have let's go back right about here. This would be good. Okay, so you see we're in a downtrend from here down. You see the stochastics is pointing down. So what do we do? Remember, we trade off daily, so we wait for the next close. Okay, so we have a green. Sorry about this. We have a green candle here, and then you see it broke our. It gave us a signal. Now, if we wanted better confirmation, we would look for the stochastic to cross. As you can see, it crossed right here, which would have given us an even stronger buy signal, which would have given us this, a couple of pips. You can see the stochastic. Now, I'm not a huge fan of overbought and oversold, which is 80 supposed to be overbought, 20 supposed to be oversold. I don't think there's ever really such a thing as overbought and oversold. If something is worth it, you keep buying it. If it's not, you keep selling it. However, that being said, I understand not everybody thinks like me, so when these stochastics starts to get up to this level here, it's not, to me, it's not like, hey, the market's going to turn. It's just a sign of caution. It's kind of like a yellow light, like, hey, something could happen, kind of like a school zone. proceed with caution. It doesn't mean you're going to hit somebody, but slow down and just look around and just be aware. So as you can see, the stochastic, now it's starting to cross. We get a red candle, and then it's starting to cross. We get a green candle here. Again, not a signal, but it tells us to be cautionary, because this market could turn around. So the next day, see that? Look, that would have kept us out. If we would have got in at this, if we would have got in at this candle right here, obviously we would have taken a loss. So we stayed out of it. We let the market tell us when to get in. The stochastics got flat. Again, it kept going up, so we just stay out of it. We wait. Okay, now we get a signal right here, and then we wait for the close the next candle. Boom, it meets our criteria here, and it meets our criteria here. So we go into this trade. We take that one. And then as you can see, it took a minute. It went back up to the resistance. Remember I said these resistance lines are killer. Look how many times it tested it. 1, 2, almost 3, 4, before it finally went down. And it gave us this. How many pips could that have been? Went all the way down to here. 100 pips. It doesn't look like much, but that's 100 pips right there. So whatever your profit target is, and then you get out. Now you could trade off of the cross of the up signal, because obviously the stochastic crossed right here, and you get another. You could go long there if you wanted to, and obviously in this case it would have worked out for a little bit. Boom! Look at this. Then now with the price action, that's something else we need to consider. Price action. You start to see trending up, yet we're seeing the stochastics is going up, but the price action is not. It's barely. We got a doji, we got a spinning top, and now we get another reversal signal confirmed by the stochastic, not only crossing below 80, crossing below the red line as well, the slow stochastic. So just something I wanted to show. And you can see if you would have taken that trade, obviously that would have been a good one. See, and now right here, now we're approaching zero. You can see on the stochastic right here. Sorry, this thing's hard to do when you're using your finger on the trackpad. So we get a buy signal there. We see the stochastic cross above 20 and cross the red line, and it would have given us a nice signal, giving us some pips there. Now this one, again, the stochastic is still pointing up, yet we have a doji, a spinning top, or whatever you want to call that, pin bar. So that means caution. We wait. We wait and see what happens. We wait for the market. We wait for confluence. We don't take every single one, which helps us with our trades. See, so if we would have taken a short position here, we definitely would have lost. If we would have kept our profits, we would have seen a nice pit move there. So that's just something I wanted to say. In scanning the markets today, there's really nothing going on. I was really confident in the euro falling and the pound falling, but they didn't happen. The trades that I put on Friday worked out. The Aussie CAD and the New Zealand dollar, they both profited, but I lost on the pound. And again, that's kind of what made me take a step back and say, okay, I'm winning more than I'm losing. The trades I'm winning more. However, the losses are greater. So that just doesn't make sense. That's a good way to lose all your money. So we have to figure something out. We have to lessen our risk and not let it get up so high, so we can increase and have more profits. Now, after scanning the market today, the only one that I saw that was potential was this one. I was gonna get into this one because I saw again, here is the candle today, the stochastic. It was down at getting near the oversold level. Again, not a big believer in it, but you can see it just closed. When it closed today, it also made the stochastic cross over the red line. You could take this trade long due to the strategy here. I usually only like to take trades above and below the line. I don't like to take them in the middle, just because it could go either way. Stochastic shows momentum, but this one thing you got to remember is that this red line or this blue line is momentum for this day. So this momentum has already happened. Hopefully, the gamble is hopefully it continues, but you're never assured that. So that's just one thing I wanted to say. And I had tweeted that I added a new indicator, so I just wanted to show it. And in back testing it again, back testing, it never works. Like, it never works as well as you want it to, because you can look at stuff in hindsight and oh, I would have got in here. You can always look back and say, oh, I would have got in here. I would have sold short over here. I would have shorted over here, and I would have got out here. But when you're actually doing that, when you're in the market, it's different. You have no emotions right here other than, oh, I missed it. Oh, I missed it. Oh, I missed this one. Oh, well, I'll get the next one. But when this happens and you have real money on the table and you see the lines cross, and then you look at the next candle and you're already down going into a loss, that's emotion. This one's 20 pips away. So it's, hindsight is good, but it's something, it's a gamble. You're hoping that this momentum can continue. Now, my belief was I was going to take this trade, and I was going to do it at the target right here. You see this big resistance point right here. It's about 40 pips. So probably what I would have done is I would have taken it for 30, and just so I didn't risk a lot, I would have taken this down to 30 pips too, a 30 pip stop. But you can see I already would have hit it. I would have been stopped out already. So, that's why I did it. This is not a very liquid pair. It's not a very, it gives a lot of pips, which can work for you or against you. Again, a 30 pip loss. The ATR on this one, these yen pairs are just weird. So I probably would have done the 60, and I probably would have put it, about right here. Again, it's a bad risk reward, only to gain, 30 or so, 40. So it probably will touch this, whether it closes bearish or not. It probably will retest that, but that's just something I wanted to go over. Again, follow me on Facebook, follow me on Twitter, Pitmeister, Facebook, Pitmeister. Email me at pitmeister78@gmail.com. I'll try to answer any questions I can. So with that being said, I appreciate you guys watching. I'll be back soon.